Hey guys, welcome back to the channel. Let's hope the audio behaves accordingly, but we'll see how it goes. If not, you'll at least get the visuals, and just bear with me here until we tweak these things. So I want to go over a stock that looks interesting coming in next week. I want to talk about the market psychology and what could actually cause a market top and what could cause a market quote-unquote crash, which I don't really see happening, but a significant pullback in the market. So a couple things really quick. Let's just get some business out of the way. The McClellan Oscillator, which is the market breadth in the New York Stock Exchange, which is a lot more stocks than the S&P 500, is kind of floundering around a little bit. It's close. It's below the area that was on May 8th, which the price points on May 8th were a lot lower than we are right now. Not a lot lower, but 292, and we're up around 295, 294, 296 on SPY. It tells you that we are still kind of showing some narrow breadth, and it's a little bit more focused on the big names, the Amazons, the Microsofts, and stuff like that. We'd like to see that number get back up above the peak of May 8th, because we've seen this before when we had this high in here on the oscillator. We had some really good breadth, and then on the next high peak, the breadth was lower, and that preceded a big pullback. And once again, this breadth was lower, and we preceded a big pullback. So we're kind of showing a little bit of an interesting chart, at least on that. Meaning that if you charted breadth in the market, you'd see that maybe the next pullback comes when that breadth has reached, maybe I'm saying, this area back in here where we've had almost like a double top, and then we kind of started to get a little bit weaker on the breadth. So maybe if we climb back up and we hit our price points on SPY and we kind of reach that breadth peak that we had at the lower levels before the big spikes, and maybe somewhere in there up in here the market will start to run out of strength. And here's what causes that. So the retail investor, whether it's in the stock market or in real estate, the retail guy is usually a sign that when they're active, and they're usually the last one to get into the market. And what I mean is that if you're a barber or you're a guy washing your car, or your friends that have never been in the stock market, and I'm starting to see this in my inner circle, are starting to ask you about stocks or opening a new account. And we've seen that too. We've seen a huge inflow and a huge percentage of new accounts opening up on E-Trade and TD Ameritrade. And that is usually a sign of some type of a market top. It's also a sign that the market has become more and more speculative here, which in and of itself is a double-edged sword, because the smart money knows that those guys have enough power to drive the market higher, and if they step aside and they play it, they can make money on it. So the guys like David Tepper and those guys that are saying the market's the most overvalued, this and that thing, if they're short right now, they're covering. They're actually pushing the market higher by just stepping aside and saying, wow, this is a little bit unexpected here. I did not think we'd continue to see this type of movement. They either join the market or they short it and have to cover at some point, and they actually add support to the market on pullbacks, because if they haven't covered and they want to wait for a higher price point, once the market does pull back, they do cover at certain areas, like we've seen in the pullbacks in here along the channel lines, and in here too. That's a bad print, by the way. They're actually adding support to the market. So as those retail investors continue to flow into the market and run out of new inflows, and that starts to ebb and flow, where you see a peak of retail investors into the market, a peak of speculation, a peak in the short covering, a lot of those things that were supplying the market with a reason and a push to go higher now turn on itself. So what happens if we do have like a major, this would be reason two, a major company, or not a Hertz going bankrupt, but like an Apple, a Microsoft coming out with an earnings report that just kind of really shocked people across the board. Like, okay, we get it. We knew that they would be pushing things back with COVID and not wanting to give forward guidance. But if they come out with something that was just way off the radar, well below anybody's perceivable perception of how low their earnings could be, that would shock the market. And what would happen is you would break a certain support level on the way down. The retail investors are already fully in the market, so they don't have a lot of firepower to add into that. The shorts have pretty much already covered on the way up, so they're not going to support it. And in fact, if things would kind of reverse and turn on themselves, where you'd have selling continue with algorithmic trading as levels start to break and you get a pile-on effect. And whether the Fed would come in and support at some level that move, they probably would, but they can't continue to play that game of buying assets and buying ETFs and holding these assets. Those have to unwind at some point. So you're a little bit of you're painted into a little bit of a corner. So that could actually happen. And just in general, the overall perception of the market being bulletproof and buying every dip, and the retail investors usually tend to be the last one in the market, tells me that, we are in for some type of a little bit of a scary pullback. But like I said, as a trader, I acknowledge that the market technicals look bullish here, despite what everybody's telling you. They look a little bit bullish to me, to the upside, and like we need to go back up and kind of retest some of these channel areas around the 300 before we see something significant. On a timeline on the Hakanashi candles on NASDAQ, it looked like Wednesday or Thursday would be sort of an end of the final leg. Doesn't mean we just completely roll back over, but those kind of look like areas where we might see a pullback. So whether that is, I know last week I said Wednesday you'd probably start to see some type of a market pullback. Whether we complete this leg up to the 300 area and tag that before then, it's hard to say, or whether we just start, some type of a pullback on Wednesday or Thursday. It's really hard to determine. But so far the technicals don't show us anything other than some interesting back and forth action along here, like we're trying to power up around the 293 on SPY before we fire to the upside channel. But we'll have to wait and see. But those are the reasons I believe a market could top out or quote unquote crash. Would be a change in the money supply by the Fed, a change in monetary policy, or a major company of the S&P 500 coming out with shocking earnings, which kind of catches everybody by surprise. Those are my three reasons that I think you'd see for a market top or a major market pullback. As far as the stock that I wanted to go over this week that looked really interesting, the ticker symbol is GLDD. You can do your research on this and your due diligence. They're very insulated from a lot of the market downturns that we see. With long-term contracts, they seem to be in a very good position. It's Great Legs Dredge and Dock Corporation, and I kind of like how this chart is acting here in the short term. I'm not going to put up the 20-day moving average or the MACD, but suffice to say that this is a really interesting company, and it looks actually pretty bullish on this recent move that we've seen, and I expect this to continue here. Interesting trade would be to go long this stock, and obviously your downside is probably 790 on a closing support level if you want to play the momentum game, which kind of puts you just below the channel here. And we've had a few dips below the channel and then a lot of energy to the upside. We've touched the lower channel and then energy to the upside. I just wouldn't want to see it in the middle of the upward move, pull back and then break the channel. Usually when we've touched the bottom, we've seen upward moves that continue. Touch the bottom, continue, touch the bottom, a little bit of this, and then we want to see it continue to the upside. So your target would be, let's say, somewhere around 950, 960 to the upside in the short term, and then your bottom would just be a short-term support level. For aggressive traders, a close below 830, and then for investment traders, a close below 790 would be your stop, I would say. Maybe 820 and change on the channel marker for aggressive momentum traders. In fact, you could probably stop it out below 835-ish area, which was the close from a few days ago, and now we have this nice bullish engulfing candle over the prior day on high volume, the highest volume we've seen in probably 6 or 7 trading days. We like that action going into the weekend, a little bit of pullback before the close, but not a problem. It's kind of holding this little line that we have drawn here from the bull bear side here. So, and this pullback here as well. So this looks really interesting. Put that on your radar, GLDD. I like it that it's kind of out of traders' radar, insulated from a lot of the stuff that we're seeing, longer term contracts, governmental contracts. They make money, good company. They actually made, what did they make here? Earnings were 52 cents a share. That's good quality move they doubled up from last quarter. So positive movement in this market, a little bit of trepidation before the market closed, but I like this chart. So we've kind of gone over a few things, the reason the market could pull back. The Hakanashi candles are telling us that some top is in for next week. Doesn't mean we just crash. Whether we can fill that price target of like 299, 300 on SPY before we pull back is hard to say, but we'll have an idea of how to trade it either way, whether we go up there and then we short the market a little bit with some tight stops for looking for that pullback, or whether the market starts to weaken next week and we have a couple buys that we like on the lower channel lines.